Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 25th, 2023. Hope you're all doing well. In today's segment, we'll take a look at one of my favorite option scanning software. It's a Barchart Premier. Look, Barchart Premier is a very low cost software. It costs around $200 with a 1 year subscription, but it's well worth it. Sometimes I feel like it's really a steal because it's got a lot of features, lot of data for stock trading, stock investing, options trading, and more. So with that, we'll dive into Barchart Premier and how I use it to find my option place and go from there. So look, as you go into Barchart Premier, you'll get a nice view. If you want to look at a stock, for example, Apple, you could just provide the stock name here or ticker symbol, and you get a nice view here. I love this view because it gives you a nice overview of what's going on here. Look, you can look at the stock chart. I provided my view as a monthly view. Look, there's a nice chart here that tells you Apple is going up and up and away. And then they got some good details around the earnings per share and so on and so forth. You could click on see more to look at more details, in more around the statistics. As you can see here, you get a nice view here, and you can go back here. And what I would want to look at is really, look, we got the options information here. It's very important for options trader. Look at the options information right here. We got options overview here, tells you the implied volatility and tells you IV percentile, IV rank, which is very important for option sellers and even option buyers for that matter. And it tells you the put call ratio, which is the volume ratio. It tells you in today's trading what's the put volume, what's the call volume, what's the percentage or the ratio. 0.59 means right now we got more calls traded than puts, which is a bullish sign. And then you got today's volume and put call volume ratio. This also tells you, hey, you know what, from a put call open interest perspective, there are more call contracts held by the customers than put contracts, which is again a bullish sign. Anytime put call open interest ratio or put call volume ratio is below 1, it's always a good sign. But the moment it goes above 1, that's where you got to watch out because it will get into the bearish type territory. So with that, let's jump in here and look at the view history. This is a rich functionality of barchart.com. You would not find this in platforms like, say, Thinkorswim as an example. So if you click on the history here, you can see here for past 3 months. You could even go all the way to 2 year. You can look at the option trading historic data. Look, we got 12/22, which is last Friday, all the way to, it can go back to 2 years. I like to look at this just to understand how is the put call volume and put call open interest ratio are trending. Look, just by looking at this, here, look, it was very high from a put call ratio perspective, relatively high a while ago. More put option buyers came in here, but look, off late put options dropped off and call options increased. That's why put call open interest came down from 96 or even 98 while ago to 84. And similar story with the put call volume ratio. Look, it was high as 87 here and 96 over here, but it backed off and now it's 0.59 as an example. That tells you the bullish momentum is picking up, so that's a good sign for you to understand. And then it's got the IV rank. You can see here how is the IV rank doing. Right now IV rank is 8.21, mainly because Apple stock off late has come down slightly. That's why IV rank has gone up. So it's the gauge of uncertainty, as many of you know. All right, let's go back here. And anytime if you want to change the view, you can always do at the top. I'll show you. And then you got earnings estimates. If you want to see the earnings estimates, you could click on see more here and you get a nice view. I love this view here. It tells you how is the estimate 3 months ago versus 2 months ago versus 1 month ago, and the current looks like Apple from a analyst perspective they got moderate buy, but look, it's 4.32 right now, which is a good sign here. It came up from 4.28, 5 being the strong buy, as many of you know here. So it's doing pretty well here. As you can see, you can look at the breakdown here. Buy, strong buy, moderate buy, and hold. Looks like we got 17 strong buys. It was 18 strong buys a while ago, but it's still a good sign here. It's a rich set of data here. You could go in here and change it to other areas. It's a nice small window here. You could go change into other areas. So let's go back here, and you can also look at the earnings estimates for the current quarter. You could just click on this here. You can see the earnings estimates. Look, we got earnings reported a while ago, and estimate is 1.39. Looks like they surprised the Wall Street here with the 0.07 cents here, or 7 cents, which is 5% upside, which is good to understand. You can also look at the last 4 quarters here and see what's going on with the reported versus estimate here. Looks like this Apple has gone higher than estimate being the red line here, and the reported being the blue line here. They have done better than estimates, which is a good sign. All right, let's go back here and look at a few more things. Look, it also gives you a nice performance chart here. You could always click on see more and look at more performance data. I like this view here. It kind of tells you what's going on a 5-day, 1 month, 6 months, all the way to 20-year. Look at the rich set of data. You will not see this type of historic data in many of these sites. Even if you see it, you have to pay a lot of money here. But with this barchart.com, you get rich set of data with just $200 for the premium, and which is a steal in my opinion. All right, let's now jump into options here. You can look at options here. We can click on options, and same story here. Let's put in Apple here for just to see what's going on here. Look, we put Apple here, you get the same chart as you can see here. It's the same information as we saw before here. You could now click on options here, and you could look at more data here. You could look at options market overview, and most people love unusual option activity. You can just see it by clicking on it. It tells you what are the unusual option activities here. Look, the moment you see volume over open interest, whenever this is high, that tells you the volume today is much higher. So that makes it an unusual option volume. So many folks look at this intently to see what's going on in the market and where the bulls are jumping in versus bears are jumping in. So this is options activity, or unusual options activity. You can look at puts, calls, and so on and so forth here. Looks like Marathon Digital here, which is a Bitcoin play. Look, it looks like there is a lot of open interest here, and volume over open interest is super high. That's why for this expiration, which just happened already, so you could filter it out. You could look at the expirations. Since it's past, you could just jump in here, and you could show only include. You could just show only expiration date. Let's click on this here. Or you could even say you want the expiration date after, just say let's say January 1st here. So you could just apply filter like this here. This is only for the premium members, and you could see what's going on here. Looks like there is nothing here. We could just drop this off here, and you could even say only after. There you go. So if you do something like this, you'll see all the options expiring after 1st of January 2024. You will see many of these. Looks like Bitcoin plays are doing well of late with the more unusual volume. All right, now let's jump in here into options again. There is a whole host of information. You can look at most active options. It's again a good one here. If you click on it, you'll see most active options. Just by looking at this one here, you could get a very good idea. Look, it will also helps you to identify your screener here. I got a screener, as you can see here, STO stock option. So that's my custom view. You can see here, I want to see just the information that I love. I will show you how to create your own custom views here. So this is a custom view that I created. I just want to see things like 100-day change, 10-day change, 200-day change, and so on and so forth here in my stock option custom view. I always pay very close attention to things like IV rank, very important, and total open interest is also super important. So I pay very close attention to those. And I think we got a few more things going on. Look, put call volume ratio and open interest ratio is also super important. The moment you see it's crossing more than one, for example, Nike here, stock got clocked or clobbered on Friday or last week. Look, that's why put call open interest ratio is more than one. That tells you more put buyers are jumping in. And same story right here. Look, we got AMD here. Looks like AMD as well as Coinbase. Look at Coinbase right here. More put buyers are jumping in here, so that's why it's a little more riskier to jump in and buy at this time. But if you want to sell put options, you get some rich premium here, because it's bearish at this time here with the high put call open interest ratio. So that's about the options tab here. And you also have rich set of information here. You could look at other things like high implied volatility and so on and so forth here. If you click on this as an example, you'll see high implied volatility stocks here. Typically, I don't like to look at stocks with the very low price here. You could change it. You could look at stocks with high price if you like, or you could even choose some custom views here. So in this one, looks like you don't have a way to filter it out here, but you could create your own custom filters here. All right, that's about the options here. You get a few more options as you can see here. And then you got here ETFs. If you're an ETF person, you could just click on the ETF market overview. You can get a nice overview of the market here. See what are the key ETFs here. Look, we got some key most popular ETFs here. You could just trade these and make a living easily if you're an options trader. And you could also look at other things here. You also have popular ETFs. You could click on it. Top 100 ETFs. They give you some curated lists here. You could look at those here. For example, popular ETF. You could see some of the popular ETFs here, which are good ones here. You could also go in here, and if you're like me, you don't probably you'll take a look at the curated view, but you want to create your own. So that's why they got this custom ETF screener. This is where I spend my time. I will have you take a look at this in a while. And then you got futures. If you're a futures traders, don't worry. You can get future market overview, and you can look at how the futures are doing as an example, whether it's index futures like S&P 500 or even other futures like gold, silver. You got a good idea. Barchart Premier is very good when it comes to the futures market. And then you got currencies. If you're a currency investor, you could get a good overview of the currency market and what's trending and whatnot. And then you got a few more things here, including the tools. If you're like me, you love to create your own custom views. For example, you want to see only the attributes or columns that you're interested in. You can go into custom views and create your own custom views. And you could create your own custom chart templates here with the bar chart templates. We got chart templates right here. You can compare two stocks, say Apple and Microsoft, easily with this stock chart stock compare. And if you're a data junkie like myself, you could download the historic data here. It's also a great one here. As an example, if you want to go into custom views here, which is one of my favorite. Look, I've created a bunch of custom views here. This is one of my view to download the data. in here I got a lot of data. Look, we got a lot of data points here. This is where I download some data into Excel spreadsheet. These guys also have a the Excel, basically a live Excel or Barchart Excel. You could also pay for it. It's a little bit higher price point. I would stick with the Barchart Premier to begin with. All right, then I got one more here, stock download. And look, this is one of my favorite one here. This stock option view. The way I created this view is really you can select whatever you want here. For example, you can say change. You have all this change here, previous change, today change, so on and so forth. You just select what you want and you can add it to your view here. And once it's in the view, you can just pull this up and down. For example, you want number of analysts above this trend seeker opinion, you can do it. So you can just move it around as you wish. So that's a great one here. I love the way they let you create your own custom view. As an example, if you want to add something else here, say let's say a percentage here. Look, we got various percentages here, pre-market, post-market, and so on and so forth. I could say, hey, I want a year-to-date percent. The moment you click on it, it goes all the way back down here. I would delete this for now because I'm not interested in this one. This is how you create your own personal custom view so you can look at your data. All right, so we are in the tools here, and you could also do templates here. Look, we got chart templates, and I would say leave, no problem. Look, I got some few chart templates here. I got RSI, which is the relative strength index. I got RSI no earnings. If you click on it, it tells you what's my setup for this template. I want monthly 10-year chart. I want candlestick open to close. I want large candles. You can see here it kind of gives you the idea. If you want extended price, you could click on it. So this is easy way of creating your own chart template. All right, so I think we talked about the chart templates. Let's go back here to the tools, and you got compare stocks. For example, if you want to compare few stocks, I have few things here: Tesla, Apple, Amazon, and so on and so forth here. Nice comparison. You can see what's going on here. It's a good way of understanding what's going on from a moving average perspective. Look, we got weighted alpha. It tells you how is the price moving in last 1 year. Looks like we got Tesla doing very well in last 1 year. With the latest, it gives more importance to the latest price data. And then we got one right here. Look, we got Amazon.com doing very well. And we got one more right here, 64%, which is Netflix. You get a good idea what's going on just by looking at and comparing these stocks here. It has whole host of information here, so you get a good idea. All right, that's about the tools here. You have daily data download, historic data download. If you just want to download some data, no problem. Bar chart got it covered here. You could say say IBM, and you can choose from 2000 to 2023. It's rich set of say about 20 years worth of data. No problem. You can download. Very easy to go download the data here. All right, so going back here, so you got that data. You could even download the daily prices. You could just say, look here, you got 3 month. You can go all the way to 2 year, as you can see here. So now let's go into one more thing here. Look, we got a dashboard here. You could create your own watch list by clicking on the watch list. I got few watch lists here. I got my silver, materials, and so on and so forth. I got few watch lists here. You could create your own watch list just by clicking on new watch list. And then we got here portfolio. If you're into creating your own portfolio, or you want to import your portfolio from some other, maybe your 401k, you can create your own portfolio here and track how is your portfolio doing. And dashboard is very important. You can look at the dashboard here and look at a stock and see how it's doing. Look, I got here a stock called SCA. It's a I think it's a Singapore based company, if I'm not wrong, into the Gaming, look, gaming is not doing very well off late. That's why chart is not doing great. But there is some good consolidation going on. And if you want to change the time frame here to say weekly, you could easily do it. Look on a weekly perspective. SE, look, it's trying to consolidate, and it could be a good time to really look at taking some position here, especially if you're an option trader. You could buy some put options way down here and make some money that way. So it's a good way to understand what's going on here. And you have whole host of tools here, and you can add your own study. There's a rich set of studies, as you can see here, and there's some fundamental you can add also. So that's how you can make use of this dashboard functionality. All right, so let's click close here. And look, I think we covered the most of it here. Now what we'll do is really, let's look at how I use it on a day-to-day basis. Typically on a day-to-day basis, I go into the stocks here, and my favorite place to start is really look at the price volume leaders. This is where I start my day here, just by looking at the price volume leaders. Look, I already have my my custom filter here on this already set, and you could change these things here by easily. You can see what custom filter you want. I also sorted this by option open interest, as you can see here. The or you could even click on it, it will basically sort it for you. Look, I got highest open interest on the top, which is Tesla, as you can see here. And I would pay very close attention to 14-day relative strength index here. If it is over say 60 or so, I'm not interested. For example, Bank of America, off late looks like it went up too much here. And look, 14-day RSI is 71 here, and 5-day RSI or relative strength index is 69. That tells you it went up high. But because 5-day RSI is lower than 14-day RSI, it tells you it's backing off slightly. And just by looking at this RSI, you could get a lot of information here. Look, Tesla, same story. 14-day RSI is 58. It's stronger in 14 days, but 5 days it's taking a breather here. So this is how you would use it. Normally, just by looking at the RSI, I typically tend to make my decisions pretty quickly. If I'm selling some put option as an example, I might sell some put option on stocks like Pfizer with the low RSI here, and look at Alibaba. I might go a couple of months out and sell some Alibaba put options as an example. But if the RSI is super high, I'm not interested. I will pass it up. Stocks will always come down. All right, this is how I would use here for the options sellers and options traders. Always look for very high open interest. It's a very good indicator of liquidity. And also, if you're an options seller, always look at IV rank here. You want IV rank to be relatively high, so that way you can make some good money by selling premium. All right, it also gives a nice trend here. Look, we got a trend here. It's really by looking at various technical indicators. Basically, this Barchart Premier comes up with a trend rating here, which is pretty accurate from a technical perspective. Then you got number of analysts, analyst rating. If you just by clicking on the heading, you get a little more information. Look, when it's 5, it's a strong buy, and when it's 1, it's strong sell. So look, we got good buy ratings here. 3.45 is pretty good here. It's a moderate. 3 is moderate sell. 4 is moderate buy. It's somewhere between 3 and 4. Look, this one is moderate buy, which is Apple. You get a good idea because 5 being the strong buy, 1 being the strong sell, other numbers are in between. And most importantly, you can look at put call open interest. Put call open interest, which is OI here. This is put call open interest. This tells you overall number of contracts held as of now. Is call more or put contracts more. In this case, the call contracts are more. That's why put call ratio is under 1. And we got the earnings date here just to understand when is the earning coming. And if you're selling some premium here, you could sell it around the just before the earning to get some high premium, because volatility goes higher as earning approaches. All right, so this is about stocks. There is whole host of information here. As you click on it, just look, we got earnings within 7 days and so on and so forth. Now, what I typically look at is, really, I look at stock screener. I have my own screeners here. I will show you my screener. Look, we got screeners here. We got various things here. Typically, I'm, off late, I'm playing a little bit safely or safe. I tend to sell a lot of these put credit spreads and naked put options. And if I get assigned, I would basically do a covered call and get rid of it. It's a famous wheel strategy, as many of you know here. So I typically go into my sell put. This is where I start my day here. I'm begin to selling premium and make some money here. Look, we got some good data point here. you know if you look at my screener here, I will go into my my set filter. You can look at my filters here. From filter perspective, I got various filters here. I want 1 month average volume to be over 500,000. Liquidity is key. You could also change this to over 1 million, and market cap above 10 billion. I want a little more stability. I'm not interested in very low cap stocks when I'm selling put options. And then we got a few things here. We got list the last price more than 30, and I want RSI to be below 55 when I sell put options, because I don't want to chase the stocks when the RSI is over 60. That tells you it's a little bit high or overbought. I want stocks to be oversold when I sell premium or sell put options or put credit spread, because when the RSI is a little bit lower, you get rich premium because stock is oversold at the time or at that point. And then you got open interest here. Very simple. I got my open interest more than 1,000. You could even bump it up. That's what it is. Very simple screener. Once you're happy with the screener, you could save your screener. I already saved it as a active stock active sell put. Then you could hit result and go from there. Very simple here, very simple screen. I could just look at this and keep selling some put options, put credit spreads and make some money. Typically, depending on your account size, if your account size is small, for a stock like Apple, you could basically sell a put spread. But if your account size is high, you could sell naked or cash covered put and make some money that way here. This will give a good idea to me. So now, by looking at this, I will make a decision here. I might think, what, look, Disney here. Disney is, look, what's going on. Look, it's 747 RSI, and from a volatility perspective, IV rank is 16. I might pick this one up here. And look, we got a few more here. 48. ExxonMobil is one of my favorite to sell put options. Look, it's got a little bit higher IV percentile or IV rank here, and nice open interest. I could pick this one here. And then we got a few more. Look, we got one more Nike, which got clobbered. You got a good idea. For some of you, myself included, you want to look at the chart. You could just click on this right here. Say, for example, ExxonMobil. The moment you click on this plus sign here, you get a nice chart here. It tells, look, I got a nice chart showing up here. It's a weekly, it's a monthly chart. As you can see here, you can customize it. You can say you want weekly or monthly or daily. I love to see big picture when I'm doing the put option selling. Look, by looking at this, ExxonMobil is on an upper territory or upper trend or a bullish direction on a long-term basis. It's taking a breather, and just by looking at this here, around 100, there is a nice support level here. So you could choose to sell some put option right here around 95 or 90 and make some good money. That's how Just by looking at this, you know what the support level, where to sell put option, where to sell put credit spread. For example, your account size is small, you don't want to sell outright put option or naked put or cash code put. You could just sell a put spread here, just somewhere here, say 90 you can sell, and maybe 80 you can buy back. Nice put spread here and make some money that way also. As an example, I can take you to Thinkorswim tab here, Thinkorswim platform here. You could bring up ExxonMobil here, XOM. Look, but just by looking at this ExxonMobil, you see here we got volatility here, 26% plus or minus 2. That's very close. You typically go around, say, 45, 50 days here. Look, we could go here, look at the volatility, 28, slightly high. And you could even sometimes, for stocks like ExxonMobil, you could even go a little longer. You could go into April if you like. 27% volatility, plus or minus $12 swing is expected by market. You could just go into one of these here. You could go into either April or March. But if you choose April as an example, and let's open this up here in April, and look, you get the delta here. You should always look at the delta, as many of you know, and I would love to stick around delta 15 or so, or even 18 is fine. Look, we got 90 at delta 18. You could sell one here if you have a small account size, and you could buy back at 80 here, and you could make some money that way. So if your account size is big enough, you could sell just here. Look, you get $164. You should always choose the mid price here. Typically market, you get a good fill at this price or mid price here. You could change it to 166. You would get $166. You could expiration date is 19th April, but typically you don't need to keep it till expiration. When you make about 50% of your profit, you could just sell it off and make some money that way. And if you want to do the spread here, you could just click on it and right click here and sell, and just do a vertical just like this here. And you can say I want 90 and 80, $10 wide spread. Your max risk is $1,000, as many of you know. Look, you get some good money here, not bad. Look, you get $116, and your risk now is capped. It's the 1,000 risk at the max. This is the way to go here, and you could just wait till you reach 50% profitability, and you could close it. Or if you think it may not, stock comes down slightly, you could wait for a month, and you can roll this whole trade to next month, or maybe next quarter. That's always a great play here. Don't wait till the last minute to really take profit or take loss. If you sell for 116 days, like in this example, maybe within say 60 days take some action, either to close the trade for profit, or if the stock comes down, you roll it into next expiration cycle, or maybe next month or next quarter. So that way you are never in a position of assignment. If somebody assigns, you can always sell call option, but normally it's always a good practice around halfway mark. If you sell it for 116 days, within say 56 days or so, you always roll it out or take profit. That's the way to go. If you make profit, take profit. But if you think if it's under loss, you roll it out, and you will get some more credit most of the times. That's the way to go. All right, so that's about how to choose some of these stocks. From a selection perspective, I always look for lower RSI here, so that way I know stock is sold off. And next thing, as usual, I always love to have multiple custom views. And many folks will ask me, hey, you know what? How do I know what strike that I should sell put option? So one thing I talked about is really, going back here, you could always choose a delta around say 15 or 20. That's the sweet spot here. So if you are around 50 days to expiration, stick with the delta, delta 15 or so right here. At look, 90 strike within 53 days to expiration. As you can see here, the delta is 12. At the same time, same 90 strike when it's out, 116 days out. Look, the delta itself is the 0.18. That's the 18% chance. So you get more money here. You could even go into one level, 81 days. Same 90 strike here. Look, you get more money. Delta is 15. So this is a sweet spot here. You could even sell at this right here. Delta 15, which is 90 strike price. You could sell put option. Key to understand is really same delta, same 90 strike price. When the days to expiration is less, delta is typically less, as you can see here. But as days to expiration increases, look, delta also increases here. It's 15 here. You get more money because you're taking more risk. And if you go to 116 days out, you get even more money and you take more risk because now delta is 0.18. So normally, if you go a little bit, higher days to expiration, you have a little more wiggle room either to, take profit or even to roll the trade into a future date. So it's always a little bit safer bet to go above 45 days to expiration. I've seen many people doing, say, 80, 81 days or even 100 days, no problem. It's your comfort level. As you go a little bit higher, you take slightly more risk, but you have a little more wiggle room to really take profit or even roll the trade out. So that's why it's always advisable to go above 50 days to expiration. So that way your assignment risk is slightly lower. It gives you more wiggle room to really roll the trade out if you think trade is not going your way. All right. So many of you, myself included, want to see a little more data points. I got multiple custom views here. Normally I use my custom view, called moving average. Uh, as you go into moving average, it's the same list here. You got Apple at the top, you got Baba, and so on and so forth. Now look what's going on here. We looked at ExxonMobil right here, as you can see here. Now I got a different view. Look, I got all the moving averages here. 5-day moving average all the way to say 200-day moving average and 52 week moving average. Just by looking at this, I love to look at this chart. Look, on a longer term, 50-day moving average all the way to 200-day moving average, it's red. That tells you the current price is lower than 53-month all the way to 200-day moving average. But at the same time, the current price is over 5-day and all the way to say 1-month moving average. That tells you stock is picking up at this time. So it's really going up and going above 5-day, 10-day, 20-day, 1-month moving average. And soon you can see ExxonMobil can take over its 50-day moving average and 3-month and so on and so forth. The moment you see more green in the shorter term moving average here, that tells you, stock is making its way higher. On contrary here, if you take Apple, look, Apple has done well in the longer term. Look, 1 month all the way to 52 week, it's in the positive. The current price is above those price levels. At the same time, if you look at the shorter term here, Apple is struggling in the shorter term. This is where I would wait slightly, let Apple come down slightly. Then you can pull the plug on the Apple and buy some, sell some put options or even buy some call options. But right now, I would wait because I see what's going on here. I see short-term moving average is becoming red, so I would wait slightly and let it settle down. Then I would pull some plug. This is one of my custom chart. It gives me a very good idea if I want to sell some put option, or even if I want to buy the stock. I do want to catch a falling knife. Instead, I like to see some greens in the shorter term moving average here, 5-day, 10-day, 20-day here. That's the case in here. I would sell some credit spread or credit put, sell some put option on Baba. And look, we got one more here, Cisco. Same story here. Look at it's taking over. It's the 5-day, 10-day, 20-day, and even 1 month moving average. But look at the longer term. After the earnings, is fell off here, but it's regaining and going higher. You could easily sell a put option on Cisco here, make some money. No, don't worry. Go 50 or 100 days out, or even 150 days out. Sell some put option, make some money here. As you scan through here, we got a few more things going on. We got one more Walmart, same story here. I love to see these type of things here. I get excited. This is where you can sell some money. Good old boring Walmart here, trying to go higher. Look, it's crossed its moving averages, uh, 5-day, 10-day, 20-day, 1 month, and so on and so forth here. Look at the RSI 52 below 55. You could sell some put option here and make some money. This is how you do it. And you can do it all day long. It's and make some money here. And look, we got a few more things. You could look at this in detail, but I also look at one more view mostly. That's my RSI view here. I love to look at this view also. Just by looking at the RSI view, something similar to what we saw in the moving average view. Look at look at Apple as the example here. Apple 193, and look at the RSI. 100-day RSI is 54, 50 days 56. RSI is improving. That means the price is stronger in the 50-day RSI levels here. But as you look at the shorter term, look what's going on here. RSI is tapering off as you go into 14-day, 9-day, 5-day. That tells you stock is a little bit under pressure right now, because RSI perspective, 14-day RSI is more than 9-day RSI. 9-day RSI is more than 5-day relative strength index. That tells you stock is cooling off here. That's why I would wait here slightly. On the other hand, if you look at other names here, like let's look at Cisco. Look at Cisco right here. What's going on Cisco here? We got IV right here. Look, relative strength index. Look, 5-day is more than 9-day. So that tells you in the shorter term, RSI is improving. That tells you Cisco stock is on the way higher. So that's why I would buy the stock itself, buy call option, or sell put option on stock like Cisco here. It's a very simple way to look at and take some decisions here. And at the same time here, many of you like to look at a little more detail. That's where I open one more tab here. Go right here, do same thing, barchart.com here. You can just get rid of all these things here. For example, you want to look at Cisco, and you could just say CSCO, and I would go into options right here, view history, and you could look at Cisco in a little more details with this great Barchart Premium here. Look what's going on with Cisco. Put call open interest ratio is 0.87. That tells you that there's some little bit bearishness going on. It came from 86 to 87, but look, it was 91 before. It was 90 before. That tells you it's right now it's in a still it's in a bullish mode, but put call ratio was indicating a little more bearish tint a while ago, but right now it's a little bit better. And you can also look at the put call volume ratio. This look, it's 0.35. It was 0.14 before. That tells you there are a little more put option buyers, but again, on an overall basis, if the put call volume ratio is over 1, it's bearish. Look, somewhere here it was bearish, but now it's bullish because put call volume ratio is 0.35. So you could take a look at this, and you could also look at the total open interest here. Look, total open interest, that tells you number of contracts held cumulative. That's higher right now. So that tells you there is more interest. There are more folks holding Cisco contracts, whether it's call or put. It's increasing. That's also a good indicator. All right, so we are right here. We looked at some of these things here. and you could take decisions just like this here. And I also have one more thing here. um, I also look at various other things. Many of you want to look at this, but some of you want to look at option chain, and maybe look at some of these things. Option chain itself, for experienced traders, just by looking at this, where to sell. You could go here and look at Baba as an example. If you go back here to Thinkorswim platform, you could say Baba, and just by looking at this here Alibaba, you would see, first you start with the uh, first you start all the way here all the time. Take a look at this here. It tells you how the volatility doing here. If you are selling some put option, always start somewhere, just somewhere here in this territory here. Look, there is a nice volatility here. Price up plus or minus 9, 11, 14, 15. Look, I sold Alibaba put option right here. As you can see here, I got some good money, 151, $151. It's a little bit longer term, but no big deal here. Alibaba is a good one. I sold it at 60 here. If Alibaba hits 60, no problem. I will just buy Alibaba at 60. I would do a wheel strategy and sell some call option, maybe at 65 or something here. If you look at 65 call option, it's going for $14. No big deal. So that's why don't worry don't worry too much, and focus only on very short term, because assignment risk is high. If you go super short term and you don't get good money, it's okay to go a little bit longer, 81, 53, or even say 160. No problem, don't worry too much. That will give you a little more safety, and as long as you stick with the good stock. All right. So many of you might want to look at option itself. We'll go into option itself, and from a stock screener perspective, typically I look at multiple indices. Sometimes I look at multiple sectors and so on and so forth here. So you should always look at multiple things. For example, if I want to look at let's go back here and go into my filters. Look, I got various filters going on here. I got sectors. If I want to just look at technology, I could do it. If I want to look at healthcare, I do it that way. For example, let's look at healthcare for a change here. This will bring up all my healthcare stocks here with a nice and high open interest, as you can see here. If you want to sell some put options right now, I would probably choose UNH, United Health here. It's one of my favorite cash cow of late. Right now it's sold off. Look at the RSI here. It's a 36. And you could also look at other one here, CNC, which is also okay. Look, there's a pretty okay open interest here. I would not go down the food chain too much. And then you could go into my, either the moving average view here to see what's going on here. Look, UNH here. Right now it's getting clobbered. Look, 5-day, 10-day, 1 month, so on and so forth is not great, as you can see here. But longer term, it's doing well. I know UNH very well, so I might sell some credit spread here with a $10 wide spread here and make some money on UNH. It's a very good stock. And if you want to look at the chart here, you could just click on it here and you get a nice view of the chart. Look at the bullishness here, on a monthly chart. Nice bullish view here. There may be some consolidation around this level here. As long as you sell your put option or a put spread, your short leg below this here, you're good to go here. All right, so now let's do one thing. Let's go back to my sell put view here. All right, so many times you want to look at a chart view. So what you can do is really, bar chart gives you a chart view here. You could go here and go to the mini chart view. So the moment you go to mini chart view here, look, there is a nice mini chart. Got 19th September, 19th May. It's a monthly chart, as you can see here. Just by looking at this, you can make the decision. Look, Apple is going higher in a longer term picture, monthly picture. Right now, it's a little bit consolidating. If you're selling some put option here, you could look at the level somewhere here around, say, 180 or something along those lines for your short leg. And Alibaba is pretty much in the downturn, but off late there is some consolidation, as you can see here around 70 mark here. If you want to sell some put option, you could go around 60 level. And look, Walt Disney, nice downturn. Look at the consolidation. If you want to sell put option, always go maybe around 80 and sell there. So the beauty of these type of charts here, you're looking at a bigger horizon here. Just by looking at this, you know where to sell put options and where not to sell put options. And look, Cisco, we talked about this. You can do the same thing here. Go somewhere here. Nice support level here around, say, around 45 or so here. ExxonMobil, same story. Nice support level somewhere here. You could go around, say 80 or something along those lines, or even 90 for that matter. And just by looking at this, you get a good bird's eye view. And look, I love Nike also. Even Nike fell down big time here. Nice support level. Look somewhere right here. You could sell something over there. And Starbucks also struggling off late here. Nice support level. So you get a good idea, what to sell put options on. I just sold on this one here, which is a CCJ Camco. It's also a good one here. You could sell somewhere right here and make some money that way. All right, that's about this chart. I love to see this. Next, I will take you to options screener here. The bar chart gives you a lot of these options, screeners here. Look, we got rich set of market pulse. You could look at these. There is advanced groupings here: covered call, naked put, straddle, strangle, iron condor, butterfly, and so on and so forth. You could use all these strategies, for your benefits. But most of the time, I'm into either selling the naked puts, or I would do say bull put credit spread, or typically I do calls here. I would do call covered, not call, covered call, just I would do covered call if you own the stock. Otherwise I would buy the call. So you do such strategies here. I typically do bullish strategies because you you can wait still like little longer. For the bullish strategies, you wait for market to really come down slightly, and either buy call options or sell put options or spreads and make some money that way. And for things like iron condors, you could do iron condors all day long, but you got to choose a stock which is, range bound. Sometimes it's a little hard to really understand the range bound, whereas, strategies like put option selling, put credit, they are a little more forgiving. You can always roll them out and make some money. Whereas condors, you got to be careful. Many times you think market is going to stay in one place, but normally it takes off either way. And you got to be slightly careful here with condors, but it's a good strategy for stable stocks. Like maybe take some ETFs or take some big cap names which don't move too much. You could do condors in those. All right. So I will take you to my naked put filter here. Look, bar chart itself will give you a filter for naked put. Look, it's got 615 choices here. But many times I'm not super interested in all these names here. As an example, I don't trade options on a $3 stock. So I got my own filter. So I could go here and look, I got right here, I got a naked put stock filter and naked put ETF filter. Let's go to my single. Let's go to naked stock here, naked put stock here. Look, it's a simple filter. It cut down from 161 to say 47. It's a short list here, and just by looking at this, it's a nice view. I have a filter view here. I got a big filter list. I will take you through it. And look, I got a filter here. Mainly bar chart lets you look at a lot of data points in the filter view. That's why I have the filter view here. Even though there is not all the, not, we don't have filters for all of those. These are just for the display purposes. Look, we got list price, last price. I want to make sure it's over 30, and all the other things here. Look, all these things just for the display purposes. I don't have any criteria set for these. And then you got your strike price. I think we already have it here. I could even delete this. I got it. Okay, this is strike price over 30, which is good. I don't want low price stocks when I sell put options. Expiration range here, 45 days to 200 days, a good range. I want to look at only monthly expirations in this because typically it's more liquid. And then you got delta. I want to make sure delta is between 0.909 delta to 20 delta, so that's the sweet spot for me. And look, we got a few more things. RSI should be below 60. Stock needs to be sold off, and bunch of empty things here. And look, we got last trade made within last two sessions, which is also good. I want to look at stocks, ETFs, and index, as you can see here. And then pretty much 1 month average volume, more than 500,000. Bid price, I don't want to sell put options for less than 75 cents. That's my bid price here. And that's pretty much pretty simple filter here. That'll kind of make my life easy. And just by looking at this here, look, we got nice list here. Look, we got Tesla. I'll take you through one quick example here. We got Tesla. Current price is 252. Today price dropped by 196. Now these things will repeat because these are stock based indicators. It will kind of repeat because it's the same stock. But as you look at this here, these are the option based indicators down here. Strike, expiration date, this will vary because look, this is a 200 strike. When the stock price is 252, 200 strike, that makes your delta. Look, we got expiration date here, which is right here, 621. Number of days to expiration is 181, as you can see here. Moneyness, very important. Moneyness tells you current strike price, which is 200, is 20% below the current stock price, which is 252. That's moneyness here. RSI is 58. These are all the stock based indicators. That's why these things will repeat, as you can see here. So just by looking at this, I might sell Delta, I might sell Tesla, expiration 181 days out, Delta 18, as you can see here, with the price here. Let's see here. Yeah, mid price right here, $11. Look, you get a nice $1,005 or $1,105. That's a good money here. You got a lot of days here. If the Tesla comes down slightly, you can always roll it off, roll it out. But look, nice money here. But if you don't want so much days to expiration, 181, you could choose lower days to expiration. In this case, 146. Price is slightly higher, 205 strike price. Delta, moneyness is slightly lower. You get a little bit less money. It's still good, as you can see here. This is where you can make some decision here and sell some either naked put, or you could even do put credit spread. We'll look at that too. So you got Tesla here, same story. You got Apple, Microsoft, Alibaba, Nike, Airbnb, my favorite Oracle, Palo Alto Network, and so on and so forth. I look at this all day long and keep selling some put options. And I might on a weekend, as an example, I might queue up some of these put option selling orders, so that way Monday, Tuesday rolls in, I got my fill done. I don't need to worry about watching them on a day-to-day basis. When you do a little more longer term, maybe say 50 days out, or say 100 days out, 150 days out, you could monitor them on a weekly, weekend, or a evening. You don't need to really distract if you're working, as example, full time. You don't need to worry about changing and managing and monitoring on a daily basis, or a during the working hours. So that's the beauty of this option selling strategies with little more longer days to expiration. All right, that's about the naked put. We'll also go into, the put credit spread here. It's called bull put credit spread. We can go into that. If your account size is smaller and you want to trade larger price stocks, you could go into this here. Look, I got my own criteria here, bull put stock option here. That's my filter. And I got simple filter here. In this filter, I got price more than 30, as you can see here. And I got my days to expiration 45 to 200 standard here, monthly, weekly. I chose both here. And delta is, when you sell put credit spread, give more importance to your leg one. Leg one is your short leg. That's why it's very important to look at the leg one and manage the leg one properly. Leg two, I don't manage it very actively. Leg one is prime importance because it's a short leg. Leg two is the leg that you're buying. It's little bit below the leg one. And as you scan through here, we got a few more things going on. Look, these are all display fields. There is no filter here. And as you see here, we got total open interest here. So I want to make sure open interest is good so that there is good liquidity. And this is very important. I love this, there's a strike differential. I want to make sure my strike differential for this credit spread is either $10, meaning there is a $10 wide width, or $25 in between 10 and 25. That tells me if it is a $10 wide spread, my maximum risk is 1,000. If it is a $25 wide spread, my maximum risk is 2,500. So it will kind of limit your exposure. It's a defined risk strategy, as many of you know. All right, then you got max profit. I want to make sure at least there is a 5% max profit and break even probability, and so on and so forth here. At least 25% break even. And we got moneyness here. We got probability of break even, same repeated twice. And 5-day volume here. This is a stock volume more than 1 million, as you can see here. I want to make sure it's very liquid. And that's pretty much very simple here. With this, we got a whole lot of stocks selected, starting with Tesla. If you don't want to sell Tesla naked put, you could do this here, 252 right now. That's the price. You could do leg one, 190, and leg two, 165. This is a $25 spread, as you can see here. You get a $3.95 credit by doing this. Leg 1 delta, this is a short leg which is right here. Your leg 1 delta is 15. You are pretty safe, comfortable territory here. Your leg 1 open interest is pretty good here. Look, 15K, not bad. And relative strength index, it's a stock based indicator, 58 here. So you could sell this one here. It's really let's see here, 181 days out, so it's a good money you make. And then you got a few more things as you scan here. We got 170, slightly higher strike price. Delta is let's see here, delta is again 0.5, safe territory. You can go from delta 15 to delta 20 easily, and look, you get some good money, as you can see here. And as your strike price of the short strike increases, you make a little more money. And this one here, look, 190, it's a $30 wide, $20 wide spread. That's why you get a little bit less money here. So just by looking at this, how much risk you want to take. You want to take $10 wide risk. In this case, we got $25 wide risk here. We got $20 wide risk here, and we got various types of risks here by looking at the differential here. That's how you kind of look at your risk appetite and sell some put options or put spread. I love to do it for stock like Tesla all day long. The moment you go a little bit longer term here, you always have more optionality. You can always roll them out. If you want to do short term, you could do it too here. Look, we got Tesla 83 days out here. You could do this also here. You get some good money here. A little bit less money here, still it's good money here. And look, delta leg one is a very comfortable level. And you could even go a little more shorter term also if you like. That's how you kind of make money here. This is a robust platform. I've seen many options trading platform, but this Barchart Premier gives you a lot of options and filters, custom views, and detailed historic options data. It's a whole rich set of data for you to manage. So that's about my bull put credit spread, and I might look at call options. For example, I have a covered call here. I could look at covered call. I could look at a bull call spreads here. Let's see here. Look, we got covered call, bull call, debit spread. This is where you'd buy some call spreads here. You could do this too. I might have a filter on this one too here. Look, this is my filter here. So look, you could do some Apple. Because price at Apple price is 193, and you got various things going on here, and you can go all the way down here. You got leg one at 185, leg two, this is where you buy 185, you sell 200, and because it's a debit spread, you pay $9.10 here, which is money that you pay, and there is the strike differential is 15, probability of profit is 49%, and so on and so forth here. If you want to do strategy of buying call debit spread, you could do it, or you could just buy call outright at this long leg here at 185. You'll pay a little more money for that. That's also a good strategy. So that's about selling, basically about buying a a call debit spread or even outright call. Next, I know many of you are interested in the iron condor here. You could just look at short iron condor, where you sell iron condor and make some money here. Look, I think I got some uh, custom iron condor here. You got iron condor 1 stock option. You could look at this here. Let's look at this one right here, sell stock option here. Look, we got some iron condor here, and look, we got in this case Apple trading at 183, as you can see, 193. You could do it's the iron condor is a four leg, as many of you know here. You got 160 and 185, 160, 185. These are on the put side here. Stock being at 193, you want to be below the stock price. So your leg one is 160, your leg two, which is very important, is 185. You are basically selling 185, buying protection at 160. And on the other side, call side here, you got leg 3, 210, and leg 4, 235. You are basically selling you're basically selling 210, buying back 235 for this iron condor. Look, you got an ask price of 0.78 here. You got 0.78 ask price, bid price is 225. You could in this I did not include a mid price. Typically you get a fill in between ask and bid price here. So that's how you would make some money here. Let's see, max loss is 1989 here. So this is the basically the way to sell these iron condors. Right here we got max profit here. By selling this iron condor, you make $5.11. This is the money that you receive. But I would say if you do iron condor, just take some profit about 50% mark, or even say sometimes even say 40 to 50% mark. But if you think you are getting into trouble, you could always roll up, roll out your iron condor, or you could play with your either the call or put. For example, if the stock is coming down big time on you, you could really roll down your call options. But if the stock is going up too much, it's hitting your call, then you could roll up your put side and play around that way and make some money here. That's about the iron condor. So we covered a lot here, and in summary, I say there's a lot of optionality here. One thing I want to talk about is really, many times I look at my watch list here. If I go to my watch list here, I might look at my watch list here. Look, I got stock option watch list here, and let's look at, this is silver. Let's go into say, technology as an example. Let's go to technology. So the moment you go into a watch list like this here, you could click on dashboard, or you could click on flip chart. My, very important here. Let's start with the flip chart here. If you go to flip chart, it's a, very good view here. You could see the first stock, Apple, where there's a high open interest. You can look at the chart. I got a 10-year chart here, as you can see here, and I got various things going on in the chart. It's a 10-year chart, and you could change the chart if you like. And look, you can just look at this and look, nice uptrend in Apple, as you can see here. And look, there is some sluggishness around this area. You kind of get some good idea, and you could change this if you want. You could add more indicators if you don't like to see all the dividend and earnings, because it's a little bit longer term. You could just go to a different template. I got one more template here called no earnings, so you get a nice clean chart of Apple here. It's again, look at, it's a nice chart, long-term chart, gives a good idea, clear head when you want to do either the buy the stock or sell credit spreads here. You get a good idea around the consolidation levels here. You could go here and sell some put option here itself and make some money and go from there. And it's very easy to go at look at multiple things at one stretch here. Look, we got Adobe here, AMD. The moment you look at the big picture, for example, Adobe here, I would sell some put option right around this price here, because there's a nice, good support level, as you can see here. All right, that's about this view here, which is a snap chart. As you can see here, it's a flip chart, and you could also look at dashboard. Let's go into my stock view here, stock screener, and go into sell put option as an example. The moment you have a chart like this here, you could just click on dashboard here, and look, we got a nice dashboard coming up here. You could change some of the stocks, and say you want to look at Apple as an example. You can say Apple, and look, there's a nice view here. You could play around, and you can change it to monthly, weekly. Let's do one thing here also. Let's change it to just RSI and no earnings. We'll get rid of those simple chart, as you can see here. Look, right now we got a quarterly, 10-year quarterly. By looking at 10-year quarterly view here, there is a nice level around here, around 140 or so. Apple, will go there, or there's a level right here. You could sell some put option here, and then you could go into a little bit lower, shorter term here. You could go into monthly here. Look at the monthly view here. Look, there's a nice consolidation level right here, and there's also nice consolidation right here. So you could look at your strategies. If you want to sell some put option, I would not go here. I would probably go right here and sell there. If you're a little bit longer term, you could go right here and sell some put option around 140 type area. For a little bit short term, shorter day to expiration, you could go to around 160. It's also a safe choice. You get some good money, but if you get assigned, or if there's risk of assignment, you can always roll it out. So it's a good way. I love this chart. There is rich set of tools available and settings available. I typically keep it simple, because just by looking at the chart and just a simple indicator like RSI, it tells volumes about the market. You don't need to go into the nitty-gritty of thousands of indicators. Keep it simple. That always helps you out. All right, that's about this one here, which is a dashboard view here. So with that, I think we covered a lot of ground here. In summary, this is a rich tool, and you get a lot of functionality, lot of indicators, and look at this the screener, very robust screener for stock as well as options. If you have not looked at Barchart Premier, I really recommend it. They give you a 30-day 30-day free trial for you to try it out. But if you like it, you could subscribe for the premium, which is very low price. just $200. With that, thank you so much. Happy investing and trading. Please subscribe.